Hi viewers, this is Srinivasan Anand, Chartered Accountant from Taxmann. I would like to discuss with you the highlights of the Union Budget 2018 insofar as it pertains to direct tax proposals. One thinks that the Finance Minister has not been entirely imaginative in his budget proposals. One of the biggest gains from demonetization was that people shifted their investment preferences from property and gold to equity, and a kind of equity cult had started developing in India, and there was a lot of money that was flowing into the mutual funds and equity markets. And at that time, when things were looking up, in the sense that money was flowing into the markets, and there was initial public offers, which were a lot of initial public offers last year, which were successful, and government even was able to surpass its disinvestment target. At a very wrong time, this long-term capital gains tax of 10% on equity has been proposed. One only hopes that the Honorable Finance Minister sees sense that there is a time for doing everything. This will for sure hit his disinvestment target, because if markets tank, if the money that was coming in now may not come in with the same speed, because there is a 10% tax. Earlier it was tax free, so a lot of money people were putting their money in. Even today, when the stock markets dropped by 400 points, the domestic institutional investors like mutual funds who had so much of money from people, they had to deploy it, and so they entered the markets when there was a 400-point crash, and the markets recovered to 100 by 100 points later. Now, this kind of a thing that had happened, now the flow of funds for these mutual funds from investors may dry up. So one hopes that the Finance Minister sees reasons and withdraws this 10% tax, because it will hurt the disinvestment process. Secondly, it may not yield any revenue, because people may opt not to sell if the markets are not booming. And third, the problem is that the whole thought of people earning a fair amount from the equity has disappeared, and people may go back to gold and property. So this is wrongly timed, and one hopes that he withdraws this long-term capital gains tax. Second disappointing thing that one sees in this budget is that there has been no increase in the threshold exemption limit from 2.5 lakhs to 5 lakhs as one had expected. Let us not forget that today the Income Tax Department is also the nodal agency for the Benami Properties Act. So the Benami Properties Act is the tool by which they can chase down the big fish. So it made eminent sense to raise the threshold exemption limit, free up the Income Tax Department resources, and deploy them after the Benami properties. Unfortunately, this has not been done. And one other advantage that would have flowed from raising the threshold exemption limit is that it would have freed up the money in people's hand, and they would have spent it, and that would have helped the economy to boom. And also, as a byproduct, large number of organizations which deduct TDS on salaries, their workload would have reduced. So unfortunately, this has not been done. The standard deduction of 40,000 has been introduced by merging the conveyance allowance tax-free limit and the medical reimbursement tax-free limit, both of which added up to 34,200. So 40,000 is just a rounding of that amount. So just not much, just 5,800 rupees in a year. That is what the salaried have benefited from that. There is one good thing in this exercise, at least that people won't be submitting fake medical bills to claim the medical reimbursement. At least that particular thing would stop. But this is a very small silver lining to a dark cloud, where we find that there is total lack of imagination. There is one other good thing that has happened from the point of view of self-employed people. that the Honorable Finance Minister has thought it fit to extend that 40% tax-free withdrawal at the time of closure of NPS account or at the time of opting out of it, which was hitherto available only to the salaried employees. He has thought it fit to extend it to self-employed also, a level playing field, which is a very welcome move. But and again, the corporate tax rate exemption, corporate tax rate has been lowered to 25% for those with turnover not exceeding 250 crores, which is a very welcome step again. But again, this brings us to the question, why only for the corporates? Why only for companies? What about LLPs and partnership firms, which still are suffering 30%? And what about individuals who still are suffering 30% maximum marginal rate? So, if companies are going to have, vast number of companies are going to have 25% tax rate, it makes sense to trim down the tax rates for other categories of taxpayers also across the board to 25%, which will be much appreciated by the people at large. So, these are the highlights of the 2018 budget as far as it pertains to people at large. Thank you.